following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to Options Insider Radio, and I hope all of our listeners out there are having a great trading week. My name is Mark Longo from the OptionsInsider.com, as well as the majority of the shows here on the ever-expanding Options Insider Radio Network. And I am joined today by a motley pool of contributors scattered all across the country, or in some cases actually both in the exact same office, just using different means of communication to get to us. We're going to start things off with the man who's usually calling in from Maine, but today he is also dialing in from Know Your Options Inc. HQ. He is Andrew Giovanazzi of OptionPit.com fame. Andrew, welcome back to the program, sir.
Hello.
Coming to us via the magic of cell phone technology. That's Tusaw's headset we have going in the background. And listeners, we will also be joined momentarily by the man from the mountains himself, good old Uncle Mike Tusaw, also beaming in from the confines of the Know Your Options Inc. headquarters there in sunny downtown Chicago, on what it is indeed a almost tropical day here in Chicago.
My ears froze off on the way over to this office.
I was just going to say, I'm not an earmuff man. I scoff at them usually. Today, after going back and forth from a few meetings and from a few conferences, I actually grabbed a pair of the wife's earmuffs. And they were a manly pair. They were black. They folded around the back of the head.
This is a earmuff day.
This is definitely an earmuff day. I won't scoff at a man who's got to wear earmuffs on a day like today. I figured I was going to a conference. I couldn't wear the big full hat, so earmuffs
come on.
Nice, manly, slender ones. I was just saying to him, I usually scoff at earmuffs myself, but day like today, I was like, you know what? It's just too damn cold.
Yeah, it's chilly today, that's for sure.
That, listeners, is, of course, the man from the mountains himself, Mr. Know Your Options, Inc., coming in from the main downtown offices of KYO today as opposed to the satellite St. Charles office. How are things in your neck of the woods, Mr. Tusaw?
Oh, real well. Always excited to be on the show.
All right, and we may or may not be joined by the boys from OX a little bit later in the show. It is, of course, expiration week over there, so they are quite busy, as you might expect. So with the team mostly assembled, we're going to dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss what's moving the markets, what's lighting up the tape in the general market. And it was indeed another ho-hum day on the street. Most of the major indices up 0.3, 0.4 of a point. of a percentage point, I should say, not 0.4 of a point. The S&P closed up about it's actually, I shouldn't say close because we're recording this a little bit earlier than normal, so the markets are still open. So as we speak, the S&P is up about 5.5 handles to 1313. The Dow is up about 32 to 12,611. The NASDAQ up 17 to 2786, almost 2787. And the good old VIX cash south of the 20 handle, down at 19.98, down 0.91 on the day, or about 4.5%. So not too much lighting up the old tape today in terms of general action. We're seeing a lot of just modest bullishness, I suppose you can call it. Or what was that you were saying earlier, Andrew, the general creep up of the market?
We've got the sleepy creep up with volatility finally, the VIX finally below 20. When was the last time we saw that?
It was in the last couple of weeks. Didn't it dip down below 20? Let me pull up the old...
I think what we're looking for now is can we keep rolling below that on the VIX?
I thought we dipped below 20. Did we not? Let me look here. VIX cash.
Well, I think 20 has been the bounce. That's my kind of the idea is can we actually break and stay below it for a while? That we haven't been able to do.
Yeah, that will be interesting to see today because I'm looking here at the numbers, and yeah, we're hovering right just a smidge south of 20. And it looks like you're right. Actually, today is the first day. For some reason, I thought intraday we had bounced below 20, but apparently that is not the case here on the VIX cash. We dabbled with it down to like 20 and a half, 20 and a little less, but 20.14 it got at one point. So we've danced with that line, but apparently never broken in through it, at least not recently.
Right, that's been the option pit line of death. We want to see that go down, and get some dedicated selling of volatility. So we'll see if we can actually make that happen.
So you think VIX is headed south of 20 for the foreseeable future? We're going to stay at these levels?
I think we keep going lower if we keep doing what we're doing. So, barring Europe coming up with the surprise, what are they going to be in worse shape than they are right now? I think we keep getting a little bit cheaper here.
Yeah,
hard to believe, but
it's like we said on our Val View show last week that it's kind of the death by 1,000 cuts of these little incidental up days, just slowly eking out any of the juice left in the markets, just enough to continually ease us off in the old VIX cash. And yeah, you're right. It'll be interesting to see if we can maintain that south of 20 level, because that is a sizable sentimental level in the old VIX cash. And if we can maintain south of this, because we always talked for years now about, remember back when the VIX was in the teens, and it seemed like such a long time ago, and now we're finally back in that range again in terms of
and it felt expensive in the teens.
Yeah, it did. Once it got north of like 15, people were saying, "Oh wow, this VIX is so top heavy. Who wants to own vol here?" Let alone when it shot north of the 40 handle. And
then nobody wanted to sell it, so it's just.
Uncle Mike, how's the BBI been so far today?
Oh, very comforting. Nothing too much. These are my favorite kind of markets. Just the slow grind up. If I could always have this market, I would be very happy.
Yeah, not too much going on in your neck of the woods. Apple's pretty much unched today. GLD down a wee bit, down about 0.5 percentage point today. So a little bit of action there. SLV almost unched on the day. So not too much really lighting up the old Uncle Mike Tusaw personal tape today, actually.
Oh, contraire. What about a ticker symbol F? Take a look at that one.
Oh, yeah, good old F. I forgot you have some activity in the old F portfolio.
Yeah, that's one where patience has paid off for us.
Yeah, it has.
Right now what we've been doing on it is we're long the March calls in addition to the stock that we own, and then we're short kind of a ratio on the February 13 calls. So not quite, kind of halfway between a 1x2 and a bull call spread, if that makes sense. So it's one that we put it on that way, so that way in case it continues to go higher, we have kind of an escape plan, so to speak, of the spread. But if it goes lower, we're going to get some decent premium on the upside. So that's been working for us, and all the heat I've taken on Ford finally feels good to kind of have it go up, actually. That's the reason you buy stocks, they tell me.
Hey, I, for one, have not been dishing out the heat on Ford. I've been a buyer of Ford as long as you have. You and I go back and forth on Apple and Gold and a few others, but I've been right there with you in the Ford camp. I mean,
That's true.
We've been going back and forth for a while in Ford ourselves. We've been legging in and out to some spreads. We actually inherited some underlying in Ford, south of the 10 handle through some of the spreads we had picked up. And I usually am not one to hold on to underlying in any position, but I held on to that just because it was such a good, attractive level, and we've been working verticals. In fact, we did something similar just now. We just overwrote the 13 handle covered on it, and then we did a few extra on a ratio just because, like I said, I like these levels. The vol wasn't bad, at least when we wrote it. It's come off quite a bit since then, obviously, so not a bad trade for us. If we rally north of the 13 handle and we're called away, as long as it doesn't explode north through earnings, I think we'll be good. But I like that position. I like having the underlying. I like being a little top heavy on the overriding of the calls. So if it takes it away, there are worse problems to have. And then we could restructure. I mean, there's a lot of ways you could restructure into Ford again. You could do your proverbial, or Uncle Mike, or Auntie Mike, I should say, proverbial wheel of fun, short the put again, roll the stock, roll into the covered call. I guess that's what you can say we did with our Ford. We had some short put spreads that we ended up getting assigned on because we didn't mind those levels, and then we've since rolled into a wheel of fun, or I suppose you can say a ratio wheel of fun. And of course, Ford has earnings coming up next week. Gotta love all these names that have earnings like 2 days after expiration,
Yeah, no kidding.
Just keep the options traders in mind. Move it up 2 days. Let us get it all in one cycle. Don't make us take on a whole new contract just for our 2 days of pop.
I think they try to screw option traders.
Brokers don't.
Where the earnings.
The brokers need their commissions.
Yeah, exactly. We were doing a show today over at the CME. We do a futures option show with them, and I was talking to their interest rate guys about what's been trading over there. What's been lighting up the tape, and across the board, all those guys are saying the same thing: weeklies, short duration contracts. But in the futures options realm, it's so much different. Where when we talk about weeklies on this show, it's primarily equity and index options, and all we talk about is people hitting the bid the moment they're listed, and then riding that short decay, riding that theta, riding that short gamma all the way until zero, and either they blow out or they go home happy. Whereas on the futures options side, I think for a variety of reasons, the use case is entirely different. They were saying, at least the interest rate guys were saying, that on their products, a significant portion of their volume and liquidity is, somewhere north of 90%, I believe he was saying the numbers were people coming in. Not only were they buying the weeklies, so they were buying the premium, but they were buying it the day before or the day of expiration of that weekly cycle.
Oh, my goodness.
So they were extremely short term. So they were literally using it, I guess in a lot of senses, you could say the way they were designed, which is to hedge very short-term event risk. And compare that to the options, or the equity option side, I should say, where it's just a premium selling bonanza. It is kind of interesting to see the way that's broken up. I think there's a couple of reasons for that. Partially because the end users of the futures options are usually end users of the product, so they have a little bit more nuanced perspective, and also because they roll them out in a much more logical fashion on the futures options side. They give you the entire 4 weeks, a full month's worth of weeklies to choose from, whereas here in equity options land, it's still week by week kind of surprise. Here's what's coming next week.
Right.
It's kind of a stupid way
slap
to
it on you.
Exactly. It's a stupid way to do it. I mean, if they really want to get, if they're lamenting the amount of premium selling they're getting in these products, which some people are starting to do, then maybe they should adopt a more nuanced rollout strategy. Give us a full month. Give me a full month worth of strikes and cycles here in Ford, for example. So if you are looking at...
love that.
That would be fantastic. I mean, look at right now. Perfect use case scenario. What do you got? You got earnings 2 days after expiration. So you got either the Jan weekly you could take, which we'll do it now, but that just got listed. So you had to wait till essentially today. Or you could you hit Feb, and those were your two options. And one of them didn't exist till this morning. So
think of the gamma. Think of the gamma you could have.
Yeah, exactly. I mean, think of the ways you could...
Gigantic.
I mean, something like this, someone could have come in ahead of time and put on a position in, like, say, the week 3 weekly to position for earnings, as opposed to having to wait till today or put on the Feb, but neither of which were ideal for them. So there's a lot of interesting different use cases that could be, I think, improved by making the weeklies a little bit more of a nuanced rollout rather than the just, let's make a deal guessing game that it is these days. What is it going to be this week? Oh, right. What strikes are we going to have? Oh, that's what strike we have this week. Oh, okay. That doesn't really work for my purposes, but I guess I'll wait till next week. Go ahead.
Yeah, I'm just, the weeklies was like their first try at it, and I think it wouldn't take much to improve it.
Oh, yeah, it was definitely very much I guess you can call it a pilot program, even though it's here to stay now. But, it's been around long enough now where I think they've had enough of this feedback from people like us that I'm assuming most of their customers the same way, that, they could easily structure this in a little bit more interesting way. Like, Uncle Mike, wouldn't you love to have the ability to choose, I'll choose any one of these 4 weekly expiration cycles to structure my spread around? You guys are always doing zero-cost collars. How beneficial will that be for you?
Oh, it would be huge. I would love it. There's times that I've just been in positions that I couldn't do anything, that I've had to alter. Yeah, I would love it. I couldn't even tell you how much that would make me happy. 2 and 3 week options to sell as opposed to 1 week. I would love that.
That changes. Let's say you're a week away and you just won't touch the week away. But if you had a 3 week out option all of a sudden that you could sell, or a 2 week out option, it changes your whole risk reward profile for what you want to do.
People might actually,
love it.
God forbid, people might actually start buying these things.
I would. You know that.
But you're a degenerate premium buyer. We already know that about you.
I know.
Now, how come no matter what do you have to be not to be degenerate? Because you call the buyers and the sellers both degenerate. So I guess just if you trade options at all, it makes you a degenerate?
It's just my adjective of choice.
You have to be long Ford. That's it. That's the only way you cannot be degenerate.
That's true. If you're long Ford,
but then you're a degenerate Ford buyer.
If you're long Ford or you're overwritten on Ford, then you are not degenerate. You are truly a genius. That's what I have to say.
There you go.
What's funny on that Ford thing, when you guys talk about strategy, like the nuance for most listeners is you guys have an exit strategy for the Wheel of Fun, right? When selling those puts. You can live with that position, so you could actually trade through all the madness.
Exactly.
And I think a lot of people, if they sold puts, if they really understand the value to trading it, is you really want to be able to live with the resulting position. If everything goes good, who gives a damn? But if things fall apart, that's when you really need to know when you want to live with it. So I think if people, when they sell puts, if they're a little more mindful of the result, they would probably have a little bit better performance overall, because they wouldn't have to be selling stuff at the bottom, when the market freaks out.
Yeah, exactly. I know for you guys and for a lot of your clients, they're getting into gamma scalping, and you're teaching them a little bit more nuanced strategies. And for them, they obviously, of course, you want to be cognizant of your volatility levels and where you're getting in and where you're getting out. But for some of the newcomers who are coming to, Options Insider for the first time, coming into options for the first time, they're a little more tentative, a little more hesitant. They want to get into selling puts to use some of these positions, but they're not sure how to do it. We always tell them, first and foremost, even before the volatility levels or anything else like that, if you're coming from an equity perspective, think of the short put and use it as a level. Get in at a strike price level where you're comfortable owning that underlying. Once you start from that position, then you could work back and say, okay, let's look at some volatility levels, let's look at some spreads, some other things we could do here. But start with, at the very least, that basic assumption of I'm comfortable owning the underlying at X level. I can do these things with it if I get assigned here. And once you have your head around that, if you're an equity guy and you're a little tentative to write puts, it's a much more comforting scenario at that point. Then you can take the conversation to the next level of, here's gamma, here's your volatility levels, here's how you scalp in and out of this, here's what you can do if you do get assigned, here's things like that. But if you're talking to the equity guy for the very first time and he's used to working limit orders in equities, and you're trying to convince him to get paid to do that instead, it's an interesting way to start that conversation off and get them to the point of comfort. I did that. I use that proverbial example of my father, who's not exactly despite what I do for a living, is not an options devotee. Let's just say that. And he likes equities, likes trading equities, very comfortable with equities and ETFs. And I've slowly got him into the comfortable using some of these alternate strategies as opposed to just simple things like working limit orders in a stock, which quite frankly, if you're going to be doing that all day, then you might
Sounds like he could use an option-based financial advisor.
You know, I think he was looking for someone who also knows how to clean and gut fish and to wrestle a grizzly with his bare hands. So I think I might have to send him your way, Uncle Mike.
You should have seen the hat on Mike's head when I walked into the office. I knew who it was right away.
Was
he had this big fur hat on in the office. It was a layup.
Well, he had just come from cleaning his lunch before he ate it, so he needed the appropriate headwear.
Got me some Asian carp out of Lake Michigan.
Oh, speaking of Uncle Mike, before we go any further in the trading block, I know a lot of our listeners are dying to know, have you indeed broken out the snowmobiles for the year yet?
Oh, yeah. We were out riding the other night. My little girl, Gracie, she just turned 3, and I took her on her first snowmobile ride, and she loved it.
Awesome. Happy birthday to Gracie. My little guy just turned 3 as well, so they must be in the same camp there.
It is.
They'll have to go snowmobile riding someday, the two of them.
Yeah, definitely. If we have a snow like last year on Groundhog Day, I'll take the sleds in. That's what we'll do. We'll do the option block from the snowmobile trails of Chicago.
That would be a show.
Wow.
I would pay to listen to that.
Lakeshore Drive.
Speaking of which, did you ride the snowmobiles into work today?
Did not quite that much snow.
Yeah, we're about
3 feet too short for having the amount we would need to come into Chicago.
We're not quite there yet. All right. Anything else lighting up your own personal tapes? I'm sure you're still watching Apple. Apple is what, next week as well? You have a big day on the 24th, Uncle Mike. You got Ford and Apple. What are you going to do? How are you going to handle it all?
I don't know. I don't know what I'm going to do. With Apple, we're short, though. I rolled up to the 450 calls on Apple now, so I don't know. I'm just going to Monday readjust and see what we can do on it. But right now I'm at 375, 450 on the collar with Apple. So I'm definitely a little bit bullish going into it, but Monday that could easily change.
Andrew, you're like this. I was eyeing buying some premium in Apple the other day. I was looking at, I think it was the 425, 445 or so iron fly, and I was pricing that up, and it was looking kind of attractive. At these vol levels, it's hard not to be a premium buyer in Apple. I'm not usually a fan of buying premium going into an earnings like this, but it's if you manage it well enough, it should be a decent outcome on that end, I would think.
It is very tempting. Yeah, I'm giving serious thought to just going open upside and a tight put. I'm giving real serious thought to that come Monday. It's premium levels are attractive. I agree.
I'm surprised you haven't done that already. You know, just take the upside off. You're not getting much for that anyway. let the stock fly high, and then keep the put on for when the people eventually wake up and realize Apple may not be worth $450 or whatever, and then you're riding high.
When was the last riot when a retail outlet could not provide a product?
I saw that. I saw that.
Patch Kids in like the 80s.
You know what was interesting about that, though, is that kind of got played a little differently, a little incorrectly here in the Western media. It made it seem like people really wanted those phones, and which is true, there is demand, but what those guys are so upset about in line is those are all people who were paid to wait for, because people over there, you know, the oligarchs, whatever, they can't be bothered to wait in line at the Apple store for their iPhones. There's a cottage industry of people getting paid whatever amount it is to stand in line for hours and buy a phone. And it's apparently a pretty decent wage. Like if you do that for a living, you can make a decent amount comparable to working in a factory nearby or something like that. So those people who were all rioting were pretty much out of a job. So that's why they were all upset. They had all been paid there to wait, or the bulk of them anyway, had been paid to wait for phones to sell to somebody else. And when they don't get the phone, they lose that money. So they were understandably a little upset.
Oh yeah, that makes sense. But you have to. But think about it this way: you're a guy that wants a phone, and you don't have enough time, so you have to pay somebody to go buy one for you.
Sounds like my life. I should be a Chinese oligarch. I would be doing pretty well, I think. And now that we've offended all of our...
I think there's something to be said to it for it.
Oh, of course, I guess we can't close out the old trading block without mentioning the perennial dog on the list, good old Kodak. Looks like they've finally thrown in the towel over there. They have filed for a bankruptcy. Surprisingly, the stock only down 35% on the news. You know, a stock's in dire straits when they only drop 35% on news of bankruptcy. It still has some juice. It's got trading about 36 cents right now.
Maybe they still have some of those patents buried in there somewhere.
Well, that's the weird thing about it. They just filed suit against Samsung for patents like 2 days ago. And so everyone saw that and said, oh, maybe they're going to make a go of it. You wouldn't enter into massive litigation if you're planning on filing Chapter 11 2 days later. And then apparently that was exactly what they had planned.
Right.
We're going to file a lawsuit, and then, okay, now we throw in the towel. I'm not sure what was going on in that strategy session, but probably about the same thing that was going on when Cisco decided to just dump Flip. And I'm sorry, Uncle Mike, I didn't mean to bring up that painful Cisco chapter of your life again. So maybe we can just excise that from the book. Speaking of which, Cisco flirting with the 20 handle today. So perhaps the future is bright for good old Cisco again. The company they also shut down, I believe, recently their teleconferencing division. They had some ridiculously high-end teleconferencing hardware they were selling, and then they realized everyone could just use Skype for free. And it was really killing their business. So they shut that one down as well. So Cisco not exactly making them the savviest of choices on where to expand and spend their acquisition dollars of late.
Teleconferencing sounded great until Microsoft bought Skype for $8 billion.
And the best thing about the Skype
They're going to give it away to everybody.
Yeah, the best thing about the Skype deal is that that's like the third time that platform has been sold. So those guys have really done well. The guys who owned it the first time sold it to eBay for $1 billion plus, I believe, bought it back recently for pennies on the dollar, then flipped it again to Microsoft for $8 billion. Not a bad little wheel of fun for them.
Yeah, they're probably option traders.
Well, they should be if they're not. All right, anything else lighting up your tapes before we dive into a quick odd block here?
The only thing is how about the screw job in the settlement of the VIX this week?
Oh, did you? I haven't had a chance. I know we mentioned on the last show we were going to read the settlement revision procedure, and I haven't had a chance to read that circular. Have you looked at it, Andrew?
Right. I haven't been able to get it yet. I think they're holding off a bit, even though they said they were going to. The last thing I had just heard that they're holding off for, I don't know if it's an expiration. But, I mean, this settlement was classic where the VIX has been headed lower for, like, pretty much 2 weeks in general. And the only real uptick was on settlement day. You know, it ticked up about, almost 10%, settled up 10%, and then immediately melted for the rest of the day. So I thought that was a classic where you can be right on the overall direction on the VIX and wrong at settlement because it's so nasty.
That is classic VIX.
Expiration.
You know, that you hear that story so often of getting just completely screwed on the settlement. Another reason why we tell people if they have something going their way in VIX going into settlement, just close it out. You know, don't play that game. Yep. Why play that settlement risk? I spent enough time in the SPX doing opening rotations to know how crazy that process is.
I know. It's nasty.
You don't want to mess around with that in the VIX. Roll. Yeah, exactly. I think I've heard a lot of scuttlebutt that the previous, not even this settlement, but the one before it was so off that really prompted a lot of people to get their ire up and maybe cause this recent, or finally get the impetus up to do this recent adjustment. And I'm sure this week's settlement won't help that process at all. I'd be curious. No. I haven't looked at the paper. I'll have to look at some of the guys out there to parse that paper flow in the VIX to see if that spike was indeed caused by the proverbial, 800 puts and stuff that all of a sudden start getting some high levels of volume and start having some bids all of a sudden going right into the I'm not the 800 puts, but actually the 800 puts in the SPX, yes, which would of course drive that up. All of a sudden these nonsense puts start getting some bids around settlement day. I'd be curious to see if that pop was due at all to those things coming in, if that was just, quote unquote legitimate paper flow causing that pop.
Right. Yeah, I don't know how legitimate. A couple of bids out there and then boom. So it's anyway. I just wanted to make that. We probably won't see this settlement, much past one or two more expirations. It looks like.
Yeah, they know that they have to really do something drastic over there, or they're going to end up strangling and killing this lightning in a bottle that they've created with VIX. Once people come into it, they get attracted by the marketing, by the hype, by the fear gauge aspect. They get into it. Once they start learning the nuances of the product, they start backing off a little bit because there are so many intricacies that could easily come back to bite you if you're not really well versed in how they. And quite frankly, no one's well versed in the settlements. it's a crapshoot. You're rolling that dice every morning on that settlement morning when it comes up, whether it's going to go your way or not. I guess the best way to hedge yourself is to be long and then go out and pick up those garbage puts for a cabinet or whatever out in the SPX and then hedge yourself that way.
Right. Yeah, it's a tough thing to trade.
Was that you picking up those 800? Is that you picking up those 800 and 700 strike puts in SPX last week or a couple of days ago there, Andrew?
Yeah, I spent $3 million on them. No.
That's the odd thing. Some studies I've seen show that it doesn't even have to be that much. It can be not that much at all to really cause a significant bump in the settlement price of the VIX. One guy was even showing.
Oh no, not at all. You just have to print. You just have to print some stuff on the offer.
You just have to print a bid essentially. So you can do it. They had one example. I'll have to see if I can. I'll send you this article I had where some guy sent this to me about how you can get a significant bump with as little as like $25 worth of contracts. So I mean I don't know how big the bump was, but it was enough to be worth your $25.
Wow.
So yeah, I mean there's a lot of that kind of interest, and of course I'm completely speculating. It could have been. I haven't looked at the paper flow in the VIX on settlement to see if that was indeed the case. I just know from previous settlements that there has been a flurry of, let's say, dubious bids coming into those downside puts in the past, and it certainly stands to reason it could have happened again. All right, that's going to do it for the trading block, and now we're going to roll right into an abbreviated odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the Odd Block. And since I have been out of the office most of the day doing other shows, I didn't have a chance to really peruse and parse all of the interesting, unusual, and sometimes downright dubious options activity that is lighting up the tape today. But we do have a few interesting trades up here on the optionsinsider.com, and this is where I pull the bulk of my trades from. So if you're ever interested in where we're getting these names from, then just surf on over to theoptionsinsider.com and you'll find those unusual activity names I mention on the show, as well as quite a few more on any given day. We're going to kick things off today with Safeway, ticker symbol SWY. I'm used to saying close, but it's currently trading at $21.82, up about 28 cents or 1.5% or so on the day. This is the name that does around 1,400 contracts a day. Usually they did over 13,000 today, so nearly a 10x gap up in volume today. And of course, this is a retailer of groceries and consumer products. I'm sure most of you out there are familiar with Safeway, and they have earnings coming up in just a few days. And looks like someone's coming in with an interesting play on this. We saw a 1-by-2 ratio put spread rolled out to March here. So they weren't doing, not a front month earnings play. This is a few months out on the old calendar. Looks like this guy picked up 4,100 of the March 22 puts. These are now in the money puts. He paid 37 cents a piece for those, and then he sold. I'm sorry, he paid $1.09. I was gonna say that's pretty cheap. That's a good deal he got there. But he bought them for $1.09, and he sold 8,200, so 1-by-2 of the March 20 puts for 37 cents. It netted out to about 35 cents a contract. Of course, we've noted in the past here on this show, and we talked about it at the top of the show, how much we like those ratios, how that's a good way to finance and fuel this case looks like it's an opening speculative play here on Safeway. He's specking to the downside and financing his costs, so he's not paying that full $1.09 here out in these March contracts. He gets a relatively cheap way to pick up some downside premium here in Safeway. And it's not a bad bet here looking at the overall chart. I'm not exactly an analyst of the grocery sector, nor do I ever want to be called an analyst given the high esteem we hold analysts on this show. But looking at a recent chart of Safeway, wasn't too long ago, back in September, this thing was trading south of the 16 handle. So this 22-20 put spread is looking fairly good. And if it does gap south here, it gets down to the 16 handle. This guy's like we talked about earlier in the show, this guy's obviously comfortable picking up far more of the stock here at the 20 handle. So overall, not a bad cheap downside spec here on good old Safeway. Any of you guys have anything to add here on this grocery bearish spec?
I don't have anything huge. In Safeway, I noticed that the or in super value, which is another grocery store stock, 30-day volatility is at a year low. So I'm just kind of curious as to these kind of forgotten little grocery stocks, as they all kind of, and not only that, is the stock is pretty close to, it's not trading 52-week lows, but it's closer. So I don't know if one has to do with the other, but that's the last grocery stock I've taken a look at lately. It's just starting to get cheap.
Yeah, looking at these vol levels and just the chart here on General and Safeway, it's up a substantial bit since late November of the last month and a half or so. It's rallied from in the 18 range all the way up to about 22 now, so it's got a substantial run. So the vol has come off quite a bit, so this guy's getting a cheaper play than he would have otherwise. And you're right, I don't particularly watch the grocery sector, so there probably are a few hidden gems, and perhaps Safeway is one. I'm looking at the rest of the paper out here, and not exactly lighting up the tape. Here's a 1 lot, here's a 25 lot here, here's another 1 lot in February. Then you have this massive 1x2 out here in March. So this guy is obviously taking up pretty much all of the oxygen in the room out here in Safeway. So always an interesting perspective. This guy's gonna have some fun taking this off if it goes against him. I think he knows he's wearing this one way or the other. He's wearing this to expiration. All right, so that's gonna do it here for the old odd block. And now, since the boys at OX are busy handling their expiration, we're gonna roll right into a strategy block.
The strategy block.
All right, and welcome to the strategy block, and this is the portion of the show where usually Uncle Mike comes in with an interesting strategy or bit of wisdom from the options market. And today I'll open up the floor to either of you, Andrew or Mike, whoever wants to take it. So whoever gets it first gets to do the strategy block. I will open the floor to you two gentlemen.
Me.
All right, Uncle Mike was on the buzzer first, so you're the hungrier one today, so you get it, sir.
Okay.
We'll leave it for Andrew.
Today,
we'll leave it for Andrew next week to us about buying premium in Zynga.
Ooh. And today we're going to talk about revenge trading. When a trade goes against you, just continuing to double down until you get even with the underlying.
I like it. That's how I make all my money, by the way. I'm not sure if you know that. I take revenge upon the market on a regular basis.
You too, huh? Okay. Today I want to talk about win-loss ratios. Oftentimes people mistake high probability with guaranteed free money. And it's not often the case. I was talking with a gentleman today, and he's looking to make a few percentage points to try and supplement his income. So he wants to live off of his nest egg. He's he's 55, saved up a good amount of money throughout his career, and he wants to live off of it right now. And he has enough money to where he can do that. But with it, we're just kind of talking today, and he has experience with trading. He understands that sometimes markets go up, sometimes markets go down. He gets that. And so we were talking about option-based income strategies. And so we're going through that, and he says, well, I want to make X amount per month. And so we're talking about, and I said, okay, what your expectations are very realistic. What he needs is 0.7 to 1% per month, and that's what he's looking for. Now, with that being said, I wanted to make it clear to him that it's not going to be like an annuity. It's not going to be like you get your check every month and you're guaranteed this specific amount. It doesn't work that way. You have to have the mentality like that of an apartment renter or a landlord, I should say. And that, yes, you do get a rent check every month, but sometimes the rent check's a little bit more than others because sometimes some of your units are not occupied or sometimes people just don't pay. And then there's other times you have to factor in the fact that you're going to have to do maintenance on the building and things like that. So the amount of income that you're getting as a landlord isn't necessarily your profit. The same holds true if you're looking to be a premium seller in the option world or even a premium buyer, whatever the case may be. You have to factor in the down months. So as we're working through this with this gentleman, and he likes what he hears, but I had told him that there's going to be some months that you lose money. I know that's a shocking thing to actually lose money in the marketplace, but overall throughout time, if you consistently take out that amount of money every month, leave some of it on the sidelines for adjustments, we believe that what we can do is a doable thing throughout the 5 to 10 year period, or however long his tenure is with us. So the message for today, premium selling is not an annuity, and understand that there's going to be risk involved with it. And the way with which you stay involved, the way with which you can have success with doing this, is how you prepare for the risk and how you manage the risk to the downside. I can sell a put on a stock, and if the stock stays the same or goes up, any idiot could do that. The key to being a successful premium seller is how you react when it goes against you. And that's whether you're selling premium or buying premium. I'm only addressing the premium sellers today just because of the fact that oftentimes people view the higher rates of return that you can get in premium selling as an annuity, and that is not the case. So the message for today, as it is almost every day, manage risk.
So I'm confused, Uncle Mike. If I come to you to manage my premium selling portfolio, you don't just cut me a check for 7% every month? That's not some guaranteed return that you're giving me. It's not an annuity. I'm very confused.
Well,
he's going to tell you have to act like Mr. Roper from Three's Company. You've got to be a landlord and collect. Sometimes you collect your rent. Sometimes you don't collect your rent. And that was my weakest 80s pull ever. From Three's Company.
I don't know. Is Three's Company even count as 80s? That's like late 70s almost, isn't it, right there?
Yeah, I think
Man,
that's late 70s.
Too old. I'm too old. I'm going to just be quiet and let Mike finish.
As you're speaking, I have a vision.
Mark, if you come on board, we'll cut you a check for about 10 to 15% a month.
At least. I would think at the very least. I expect no less from you guys over there at KYO these days.
Only for you, though.
I get the special in-house deal.
But keep in mind, the fee for the following month's going to be about 30%. So
I expect that as well. There we go. All right. And with that cautionary tale, we're going to close out the old strategy block today. And now we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, a portion of the show where we talk about what's coming up on our prospective trading screens. And surprise, as we talked about at the top of the show in the trading block, it's pretty much earnings on our horizons for the near term anyway. January 24th, going to be a big one for good old Uncle Mike. And for a lot of us here, Ford and Apple both lighting up the tape, on January 24th. We also have some other names coming up before then. We have good old Southwest Airlines came out before the open today. Looks like the market likes their results because they're up about 3.5% on the day today. We'll have yet another good old discussion of Microsoft. They're coming up in about 10 minutes, so we'll see how they announce after the close here. Microsoft, we've talked in previous episodes how they've just been a premium seller's dream every earnings, and let's see how that straddle is shaping up going into the close today. The weekly Jan stock's trading about 28.16 right now. That weekly Jan I don't know, it's kind of mid-range. You got 27.5 and a 29 strike. So if you look at that 27 straddle, it's got some juice. It's got 65 cents of juice in it already, but it's trading at about a buck 26 or so. So about 60 odd cent premium here for the Microsoft straddle. So not exactly super enticing, but in previous earnings announcements, if they follow their pattern, which they have for years now, it'll be a resounding meh. And then the premium sellers will be happy that they came in and hit that straddle. Of course, I say that now. This will be the one episode where Microsoft hits it out of the park. I doubt it, but you never know. I know in years past, Microsoft's always been a premium seller's dream. And then, of course, we have you name the name coming out next week. We got AMD, Apple, the big one. Uncle Mike, he's preparing to go, as you heard him at the top of the show, he's prepared to go hog wild and just go long the upside and just long the underlying and then just hold on to that put. And
decision will be made on Monday.
And for him, a tight put is, I believe, the 175 put. Is that correct?
No, we're going to go 180s.
Oh, swinging high there, sir. Getting really defensive there. I like it. So anything else on your guys' radars? I know mostly earnings for us. What are you guys watching in particular? Obviously, Uncle Mike, Ford, and Apple. Anything else you're watching in particular?
Those are the two biggies.
Oh, no, yeah. Just for us, we've been watching. There's kind of a relatively high amount of skewness right now in the indexes just because those vols coming in is kind of out of the money puts were a little juice. So looking at 1x2 spreads, things like that in some of the ETFs, centered a little lower with a small credit, and we actually watched it come in a little today, so that wasn't too bad. And also just cautioning people as you go into earnings, make sure that you're getting what you pay for when you buy options, because the volatility crush after earnings is near certain, and you want to really make sure you take a look at how your position is going to perform, with the volatility down 20, 25%. So if you want to get long with stock, just make sure you have a position that's going to fit with what's really going to happen after earnings, at least from a volatility perspective.
All right, and that's one to grow on from Andrew. I think that's going to do it for this Around the Block segment. It's also going to do it for this episode of the Option Block. I want to thank both Mike and Andrew for joining me today on this hurried up episode of the Option Block, but we still got some good content in there. And I know, starting off with you guys, Andrew, I believe you have a webinar coming up, correct?
Yeah, we just had it Wednesday.
Oh, you just had it. That's right.
Yeah, it went really well. We are planning on doing those kind of monthly, and most likely kind of a spinoff of our silver course. It looks like there's a lot of interest in kind of basic topics, but more applied to the market, like what Mark did with the VIX, and how the weekend works, especially with decay, and how volatility moves around. So we're going to keep going on those things that are kind of timely for trading, but there's sort of basic concepts people should know. So just look for more of those coming, pretty much once a month on those subjects.
Sounds good. And if listeners want to check out that one you just did on Wednesday, is it archived anywhere?
I believe it is. It is available for free of all things. If you go to the optionpit.com website, click on events, and you'll be able to download the 30 minutes, and we took questions for about 20 minutes after that. It was it was a pretty good session, I thought, and got a lot of interaction from our subscribers.
All right, and Uncle Mike, what is coming up in the land of KYO that may intrigue our listeners?
Monday night, I will be on the Options Express radio network, webinar network, whatever you want to call it. I'll be a special guest speaker on Trade the Plan, or Plan the Trade, Trade the Plan, just talking about ways with which to manage risk, and it'll apply to you whether you're more of an option hedger, whether you are more of a short-term trader, whatever the case may be. We'll talk a little bit about trading psychology, ways with which to manage risk, why you would do certain things, why you wouldn't do certain things. And this is one of my favorite webinars to do. So if you are not doing anything on Monday night at 9:30 p.m. Eastern Time, you can register on the Options Express website in the educational webinars section underneath the Educate tab. I'd love to have you, and like I said, this is probably one of my favorite webinars to do, so love to have you.
Next to, of course, the Trading with Stupids webinar that you've been promising for years now.
One of these days. Google is down $40.
Are they announcing right now?
Yeah,
Yeah.
Let's pull it up then for a last minute.
Google's always good for. I never fade the earnings in that stock because it's the only earnings stock I've ever seen go up $100 on earnings. After that, I've been forever scared on how Google trades at earnings.
Yeah, they're down about 8% or so right now on a little closing of the show update here. Google taking a bit of a beating right now. Closed at 640 roughly on the day, trading 590 in the after hours, so down 50 handles. Substantial move,
yeah.
Maybe.
That could be down $100 today.
Yeah, easily.
All said and done.
Let's see where that, just for our own edification, let's just see where that juicy weekly straddle went out. Oh, it went out at about $35. So you're
down $50 now.
You're already a loser.
$49.50. It's at $5.90.
You're already a loser if you were selling premium. Of course, if you're selling premium going into Google,
down 8%.
You're perhaps a more aggressive
bold
fellow than I.
Yeah, you're just bold. That's it.
Yeah, especially at these levels, 640. I'd imagine that was a decent. Of course, hindsight, of course it was, but I'd imagine that was a decent. My old favorite, the old Iron Fly, there might have been a juicy one to look at as well. I haven't played in Google in a while. Maybe it's time to start looking at that one. It's such a beast these days. It's so unwieldy to do anything out there. That it kind of limits my time that I spend out in the Google waters these days.
Right.
Kind of starting to have the same problem with Apple. These positions are just so unwieldy out in Apple. that it really just it becomes cumbersome after a while. That's why Ford's so pleasant to get into and out of on a regular basis. You can do it with premium numbers and margin levels that are relatively nominal and relatively easy to manage in your head, as opposed to these crazy names like Google and Apple. All right. And of course, listeners, if you want to hear more about anything we talked about on the show today, or anything from the options market in particular, unusual activity, news, education, information, any of the other radio shows we do here on the Options Insider Radio Network, then surf on over to theoptionsinsider.com, or you can search for Options Insider Radio in iTunes. You can find all of our shows there, including the fun new Advisors Options show we do for the financial advisors out there who want to know more about options. So I want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a hit, and we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.